Yeah, about 3. Mm-hmm. All right, sounds good. Appreciate it, James. All right, so definitely appreciate you, James, for the opportunity to, host this class, talk about accounting, tax, and really, I mean, just the foundational stuff that you need to know when it comes to business, right? Sometimes we start a business, and for whatever reason, we forget that there's a money aspect or there's a financial aspect of it that we have to consider. So my goal today and the next 2 classes that I'm a part of is to enhance your skills, enhance your mind, enhance everything that you have when it comes to finances and money. I do want this to be very engaging, so you can feel free to ask any questions, unmute yourself, type in the chat box, whatever you need to do to ask a question. A few housekeeping items in that we do ask. So this is streamed, by the way. We're live on Zoom, so this is my Zoom platform. And then we're also streaming live on Facebook and Instagram. We tend to do that just to expand the audience just a little bit. So we do a live stream. So sometimes we get questions, like sometimes we get really good questions from Facebook. We get really good questions from Instagram. Just to engage the conversation a little bit more. My main focus today, though, is the Zoom platform. So for, the Urban League class, that is my main focus today. So anybody who wants like a PowerPoint or a recording or Excel spreadsheet, anything like that, that's going to be done directly on the Zoom. So my apologies to the Facebook and Instagram folks. You won't be able to see that stuff. You won't be able to see the content. You'll only be able to listen to what we're talking about now. So with that being said, though, I always like to go around the room and just hear intros, right? I usually like to start off with what your name is, your business, and then what you're looking to get out of today, as well as the financial sessions in general. So with that being said, is there any volunteer that would like to go first? Yeah, I can hear you, Sonny. All right, appreciate it, Sonny. All right, anybody want to go next? Mm-hmm. Got it. Got it. Okay. Appreciate it, Christiana. Anybody want to go next? That's a lot of shy people today. Hey, how you doing, LaShawn?
profitable and continue to move forward.
Got it. Sounds good. All right. Anybody want to go next? We got name and then business and then also what you're looking to get out of today, essentially.
My name is Valerie Dio, and the business that I aspire to open is a therapeutic autistic school for children ages 2 at 6 years of age. I want it to be a non-for-profit, and I will receive grants and that sort of thing from the government perhaps, and then bring in some other entities that may allow for it to be like a for-profit, opportunity. So, just wanting to understand just how something like that would work. That's all.
Got it. So is your business mainly a nonprofit, or did you also mention a for-profit aspect of it?
Maybe being able to sell products that parents may want to, with the autistic children, may want to purchase for themselves at home, that they can use at home.
Got it. Okay. Sounds good. All right. Anybody want to go next? We got name, business, and then also what you're looking to get out of today. Anybody?
Okay, don't have me calling names out.
Yeah, we can hear you. All right, sounds good. All right, anybody else want to go next? We got name. We're just doing intros right now. Go ahead, I'm sorry. So yeah, just your name and then also your business or industry and then what you're looking to get out of today. Okay. Okay. And what are you? So today we're focusing on accounting for your business. So you mentioned that you own a retail boutique, but I guess what are you looking to get out of the whole finance and accounting discussion? Okay. Got it. Got it. Okay. So more bookkeeping. Got it. Okay. Okay.
The goods, how much you pay, how much you sell stuff for, that type of stuff.
Got it. Okay. All right. So it looks like we got two more people that haven't gone yet. We got 6 that went so far, and we got 2 more. Anybody? Let's see here. We got somebody who's named iPhone. And then, I'm sorry, who's M Pine? Yeah, we can hear you. Yeah, did you want to introduce yourself? Yeah, we can hear you. Can you hear us? Mm. Okay, Pastor. Mm-hmm. Got it. Okay. All right, sounds good. So it looks like that's pretty much about everyone. Definitely appreciate you guys for sharing that. And I always like to kick off the conversation with introductions because I always like to know who I'm talking to. And I always like to make my examples as relevant as humanly possible. For those that didn't catch it earlier, we are basically streaming on 3 platforms. We have our Zoom main platform, and that's hosted by the Chicago Urban League, entrepreneurship program. So this is a program specifically, the content is specifically for the program. But what I like to do is I tend to stream it live on Facebook and Instagram to my audience, just so the content is at least out there and we can get some feedback. So if you're not hearing something or if you're not seeing something, the reason why is because we're on a main platform, which is Zoom right now, which it is a private channel that we're on right now. But the reason why we're streaming live on Facebook and Instagram so that you can at least hear the content that we do have to share. So with that being said, let me go ahead and share my screen, and we'll be kicking off the discussion with how will it make money, basically. So everyone on this call today is a business owner. Everyone on this call today is looking to make money, or at least I hope. So everybody is looking to make money. Everybody's a business owner. Now our goal is, for one, we'll need to learn about accounting basics, very, very basic concepts. What's income, what's expense, what's a balance sheet, what's a profit and loss. And then we'll also talk about how do you price your product or service to the most optimal point possible. That's the goal of today. So by the end of today, our goal is to hit on those 2 points. And let me make sure I get my timer here. Technology is crazy right now, the way it is. We literally have 2 cell phones going, plus a laptop, and then I have a 3rd cell phone, which is my timer. So with that being said, though, if you do have any questions, please feel free to unmute yourself. And then also you can type in the chat box if you're on the Zoom platform. If you're on Facebook or Instagram, you just have to post your questions or comments in the chat box, and I'll be sure to get to it. But I want this to be very engaging. I don't want this to be some sort of silent show. I want to hear from you guys, and also, take notes too. It's very important to take notes while we're talking about this stuff. It's important stuff that you will not just use for today, but you'll use for the rest of your life. Trust me. I've been teaching this class for, I believe, 4 years now, since 2016. 2016 was when I started teaching a class back in September. So this is definitely, yeah. And then one housekeeping thing too, if you're not speaking, we do ask that you mute yourself. That way there's no background noises or any any distractions talking and anything like that. If you do need to speak, you just need to unmute yourself. That's all it is. So that's just something to keep in mind there. So with that being said, let's go through the agenda. Today I'll be giving an introduction of who I am. I've already gotten to know who you are. So now I'm going to give an introduction of who I am. And then we're going to learn some accounting basics. for me, I like to keep things very, very basic. Something that I like to, I like it to be known in my presentations is that, the world has become very complex, and we're talking about a very complex topic when we're dealing with accounting and taxes and pricing and all that. It's very complicated. So what I like to do is I like to really break it down. So for some of you, if it sounds very basic, then please bear with me, right? Not everyone has the same proficiency level. Not everyone has the same knowledge that you have. So please bear with it, right? And if something sounds very advanced, then please feel free to ask any questions. Stop me. Do whatever it is to understand the content, because this is for you. We will be ending today at around 8 p.m. Central. So this is about an hour and a half of content. Usually we go till about 9 o'clock, but since it's Zoom, it's virtual, there's no traffic, none of that. We'll just keep it till 8 p.m. And then after we learn accounting basics about balance sheet, profit and loss, then we go into developing monetization and pricing strategies. So how do you make money from what you have, basically? How do you price that thing to the right price so that you can make some money? I know I struggled with this when I started off as an entrepreneur. And by the way, I'll be using Excel a lot to demonstrate some of the calculations. That's another thing that I was, recommended to do. So I'm following that recommendation. Just using simple numbers, nothing too crazy. Remember, I like to keep things very, very simple. The topics themselves are very complicated, trust me. But I like to keep it very, very simple and basic. So after that, the last thing we'll do is we'll determine a target price for the product or service. So we'll try to get down to how much you should actually be charging your customers, and maybe do some targeting, right? Maybe you're in a different market, different demographic, different state, different city. We'll talk about all of that. And you can always ask any questions that you have as well. So who am I? My name is Jeff Badu. I'm a licensed certified public accountant. I graduated from the University of Illinois at Urbana-Champaign. Got a bachelor's and a master's degree in accounting. And basically, I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. What we do is we provide a suite of financial services, including our marquee company, which is Badu Tax Services, LLC. And that's a tax firm that does tax preparation, planning, and representation for individuals and businesses across all 50 states in the U.S. And we also have clients in over 15 countries at the moment. We work with a lot of small businesses. About 70% of our client base are made up of small businesses in various industries, but our sweet spot is real estate. So real estate investors are who we tend to work the most with. Although we're not limited to just real estate investors. So with that being said, we also own Badu Investments, LLC. And with Badu Investments, that's primarily a real estate investment company that does, we invest in projects, rental properties, primarily on the south side of Chicago. So right now our target acquisition number of units is 10 plus unit buildings. The way that we like to do it is we like to go into a building that's undermanaged or poorly managed and basically take over the management and provide a better system in place. We have a system of collecting rent, for example. We have a system of late payments. We have a system of educating our tenants about resources. For example, the city of Chicago released a grant, or not just Chicago, actually the state of Illinois released a $5,000 grant for people who are having trouble paying rent. So some of our tenants were able to apply for that. And not only does it cover maybe missed rent payments, it also covers future rent payments. So we do have an educational resource for our tenants where they can find out more about different ways to build wealth and create abundance in their life. So that's just a snippet of part of what we do there. How I got started, I always like to share my story as an entrepreneur, was that back in 2016, I essentially turned in my 2-week notice in exchange for my full-time entrepreneurship ticket. So after graduating from the University of Illinois at Urbana-Champaign, I started working at PricewaterhouseCoopers LLP, or PwC for short, which is one of the top accounting firms in the world. So I was actually interning there in the past. So my freshman year started in 2010, and then my grad year was in 2015. I was able to get my CPA license and everything in that year. And then I started working full time, but I was fed up. I didn't really like it too much. Right? It was just that corporate environment, that doggy dog world. I just didn't like it too much. It was too doggy dog for me. It just wasn't my style of doing things. Right? I like collaborative environments. I don't like it when I don't even like it when anybody calls me boss. Right? It's just not. It doesn't sit too well with me. Like, hey, who's your boss? You know, who do you report to? I mean, I don't think the world should be operating like that. I think the world should be operating where people are providing services and value. They provide something of value in exchange for compensation. Or we provide different ideas where we can collaborate together so that we can achieve a common goal. So the whole thing about boss and all that, we don't do that in our organization. So the Badu Enterprises does not have any employees whatsoever. We strictly have team members, and we have, we have other different groups of people. For example, we have deal makers, we have brand ambassadors. So we have people that focus on different projects within our enterprise. There's about 100 people total within the enterprise itself. And within the tax firm, there's about 33 people total. So for me, I like an environment where it's collaborative, right? It's dynamic. And I'm also the virtual guy, by the way. So this whole Zoom thing, I love, because I've been working from home. This is a home office that you see here. I've been working from home for the past 4 years now. Even when I was working at PwC, I was working at home for quite some time, actually. And now I know the companies like Deloitte just announced that they're shutting down 4 big offices, and they'll probably just shut down a lot of offices too. So the world is evolving, and as an entrepreneur, you should be evolving with it. You don't do things that were done 20 years ago, right? That aren't working today. The reason why Blockbuster went out of business was because they couldn't keep up with, they just couldn't keep up with business, with the world, with what was going on. They were too stubborn to change. They were too stubborn to think dynamically. And guess what happened? They ended up bankrupt. Nobody shops at Blockbuster, right? The company, I don't even think it exists anymore. And there's countless of stories about companies like that just shut the whole thing down because they just couldn't adapt to the evolving world. And in 2020, we're evolving big time. I mean, if you haven't seen it, you really got to wake up. And COVID should not have been the reason to show that the world was going virtual. I think COVID was like the force that literally, for lack of a better term, it forced everybody to go virtual. If you could go virtual, of course. And honestly, every business on the planet has some component that can be virtual. There's no business right now that you can tell me that you couldn't do something virtual, whether it's a workshop, whether it's consulting. Every business can do consulting nowadays. Even if you're a medical professional, you're in IT. I mean, consulting is a very hot thing right now because people need that advice from you. They need that expertise. So for me, I was able to start my business from the ground up in 2016. The tax firm was the first company. While doing that, before launching a tax firm, I was actually driving for Uber. Right, so I was in the ride-sharing industry as well. So I literally was running 2 businesses simultaneously now. I had the ride-sharing business, and then I had my tax firm. So that was from September 2016 until about December of 2016. And I was driving Uber between that time for about 20 hours a week. But then I was also building my business plan, another 20 or so hours a week for my tax firm. And when it came time in January, I had to make a decision. Right? In life, we have to make important decisions. I had to ask myself, should I keep driving for Uber, or should I just fully 100% launch the tax firm and just focus on that? One thing that I've learned as an entrepreneur is you need to focus. Try to focus. So for me, I decided Uber was making $20 an hour. In the tax firm, it was about 150 to now 250 or 500 sometimes an hour. So I said, I played the numbers game. I'm better off here. That's my true passion, was taxes. It wasn't Uber. But here's another thing, though, that they don't teach you as an entrepreneur. You should build multiple streams of income early, passive streams. So what I mean by this was I found a site called Hire Car at the time. And instead of me driving that car for Uber, I found somebody else to drive it on a platform. It was a rental platform, like Airbnb, basically. So instead of me driving my car for Uber, it was a 2012 Mazda 3 that was fully paid off. I decided to put the car on a platform, and all of a sudden, somebody booked it 2 days later. And I took pictures of it. I put a description. 2 days later, somebody booked it, and they said, hey, I want to use it for Uber now. And I'm like, holy cow. I just went from, driving Uber to running an Uber-based business where my car is now the asset and not my time. Right? So I basically exchanged my time, or I exchanged my asset for money. So that's one thing I've learned in life, is that you should be building multiple streams of income early, especially as an entrepreneur. Because let me tell you that my car rental business, right, ended up being the first six-figure company that I started and launched. It wasn't my tax firm. My tax firm was my true passion and where my business actually, that's where I actually started. But then when I found out about the car rental business, I was like, you know what? I need to be doing that too. Now, it was a passive income stream as well, because it was an asset that was being exchanged for money, meaning I didn't have to physically work. I didn't have to put in my time to make the money. I just put my car on the platform every month. $1,000 per month per car came in. Long story short, I ended up accumulating about 10 cars that year. So we had about 10 cars going. So I was using a platform called Turo and Hire Car at the same time. And that was bringing in about $10,000 a month on average, let's just say. And now that company has since expanded into a car rental fleet of about 30 cars, which I no longer manage directly. I basically oversee the operations, and basically, I'm more on the strategy side now as opposed to the operation side. So we got 30 cars in the fleet, making roughly, so each car usually makes about $1,000 a month. So you're looking at roughly anywhere from $28,000 to $32,000. So let's just say average $30,000 a month in income. And that's all passive, right? Now, since it's a larger company, it's a partnership, all $30,000 isn't coming to me. It's spread out between multiple partners. But like a wise man told me, he would much rather take 1% of a million than 100% of $1,000, right? Because when you're earning 1% of a million for the rest of your life, that's pretty powerful. That means you don't have to sweat for that 1%. You do have to put in maybe some work, maybe some overseeing, but you don't really have to work that hard for that 1%. All right, so for me, that's my concept now. That's how all my businesses are. All my businesses have basically gone into the passive mode. In our real estate company, we now oversee about 57 units in the Badu Investments. So that's 57 tenants that pay us on a monthly basis. And ironically, similar to the car rental, each unit makes about $1,000 a month. So that's about $57,000 in monthly income passively that we don't have to work for. We have property managers in place that we pay 8 to 10% every month. But we've built it, right? We've built it to the point where it's basically feeding itself. And we're adding more and more to it every single year. The tax firm is doing great. Right, we've put people in place so that the business can run on its own. The real estate company is doing great. We've put it in place so that it can run on its own. The car rental business is doing great. We've put it in place so that it can basically run on its own. And then on top of that, we also have our entity formation. So we do help form LLCs and everything like that. Property tax appeals. We have some, to be honest, like if I'm not looking at it in front of me, sometimes I kind of forget what businesses we do have out there, because I'm not the one that runs those businesses. I oversee everything that's going on, but I'm not the manager and really any of the businesses anymore. I'm more so the CEO. I'm the strategy guy that basically makes things happen. Um, so that's just a little bit about the story. Right, in 2010, I started building my business plan. 2016, I launched a business plan. In 2020, we're now running a company that's a multi-million-dollar enterprise, and that's something that it shocks me every day that I think about it. I'm like, how do we build a company from basically $0 in revenue, to basically over millions and millions of dollars every single year in revenue? Like it's kind of mind-boggling to me, and it's all ran out of a home office. You wouldn't believe it. So that's just a little bit. I just wanted to share that story, for the entrepreneurs. I think it's always important to hear from the perspective of the speaker. So I'm not just an accountant. I am a parallel entrepreneur and a wealth multiplier. But today, I'm going to be talking to you guys from an accounting standpoint. So I'm going to put my accountant hat on me too. But I'm also going to put my entrepreneurship hat, because it all has to make sense too. Sometimes when accountants speak, they tend to think that they're talking to other accountants. But today, I'm going to break it down from an entrepreneur standpoint. One thing about me too is that I'm very passionate about financial literacy. I'm the CEO of Badu Foundation. And with that, we teach kids and we teach adults about money, about financial literacy. Usually around this time, I'm actually doing my radio show at 7 p.m. Central every Monday. But instead, I decided to teach you guys about business, accounting, and finance topics. And we do over 100 workshops throughout the year, by the way. So there was a quick question. You have a question: are you a full service firm? Yes, we do. We're a full service firm, although we don't provide all the services in-house. One thing that we've learned is that although we can do a lot of things great, we prefer to focus on a few things at a time. Meaning we don't do audits, for example. We're not an audit firm, right? We don't do, so audit is one of the services we don't offer, but we do have another company that we partner with that does offer it. Another thing we don't do bookkeeping directly, but we do have an ownership stake in a bookkeeping company, right? That's another thing about us. We have a lot of strategic alliances, strategic partnerships. So here we go, accounting basics. And remember, for those on Facebook and Instagram, my apologies. So if you're not seeing a PowerPoint or something, please bear with me, because our Zoom platform is our main platform today. This is a private sort of session, but we do stream it live so that you at least have access to the content, so that you can hear. Maybe this might motivate you to perhaps start a business and be a part of the Chicago Urban League Entrepreneurship course. So with accounting, there's 4 major financial statements. There's the balance sheet, there's the income statement, there's the cash flow statement, and then there's the shareholders' equity statement. Now, as an entrepreneur, you only really need to understand 2 statements. Really, it's only 1, but I would say 2 because the balance sheet is pretty important. But it's the income statement and then the balance sheet. When I was in school for accounting back in 2010 at the U of I in Champaign, I learned one simple thing. If you know there's one thing, you basically know half of accounting. And that left side equals right side. For the longest, I didn't know what that meant. But it simply means assets equals liabilities plus owner's equity. It's as simple as it reads. Assets equals liabilities plus owner's equity. Simply meaning that assets are things that you own. Or in other words, Rich Dad Poor Dad, Robert Kiyosaki. If you read the book, please feel free to put in the chat box that you read the book Rich Dad Poor Dad. It's an awesome book, by the way. If you haven't read it, it's written by Robert Kiyosaki, one of the mentors that I look up to. And Rich Dad Poor Dad is an awesome book. Awesome book. It allowed me to expand my mind, going from 1 or 2 businesses to now running 12 businesses within the Badu Enterprises brand. So assets are things that put money in your pocket. That's a famous definition for him. So, for example, cash, inventory, right? A building, a real estate asset, a 10-unit building, for example. That's an asset because it feeds you money consistently. It's a cash cow. It puts money in your pocket every single month, every single day. An asset is something that provides future economic benefit. So it's cash. When you have cash, you can receive economic benefit because you can take that cash and you can basically invest it into something, maybe a stock, or in a business sense, maybe it's it's inventory for your retail. Speaking of inventory, your inventory is also an asset. Sometimes you can trade an asset for another asset. When you exchange cash for inventory, you're trading an asset for another asset, and that inventory is going to allow you to make more money. Inventory is simply a product, something that you own that you can sell. For example, we sell books. That's part of our business. And we actually don't do it for profit, but if we were, then we ultimately, that book that we sell, anytime we make income, that book is now an asset. It's something that's making us money every single month. So that's one side of the equation, is an asset. Examples: cash, inventory, buildings, a computer, equipment. So things that you own, basically. And then liabilities are sacrifices of economic resources, or in Robert Kiyosaki's definition, things that take money out of your pocket. So when you owe somebody money, for example, that's a liability because you have to pay them back. And it drains money out of your pocket. Now, if you're using this money to produce income, then hey, that's not a bad liability at all. Maybe you borrowed money to buy an equipment that can generate a lot of t-shirts or produce a lot of t-shirts. Maybe you're a manufacturer of the t-shirts. Or maybe you borrowed money, $10,000, to do some advertising, right? And you're paying back on that loan $100 a month. Although that loan is a liability, it's still putting money in your pocket. So my advice to my entrepreneurs today is that try to turn your liabilities into assets. So if you have a loan, if you have a liability, try to turn it into something that makes you money over time. So that's more on the liability side. And then to make the equation perfect, you have to add something. That's owner's equity. Owner's equity is simply your net worth, what's left over. So after subtracting liabilities from assets, that leads to your net worth, or what's left over, owner's equity. So it's just how much, like the difference between what you own minus what you owe equals what's left, basically. So this is known as your balance sheet. Your balance sheet is simply a measure of where you are financially at a certain point in time. It is good to always keep track of this because it allows you to see your financial position, right? It allows you to see how much cash do you have in a bank. It allows you to see what loans you have outstanding right now. What's your net worth? Are you in the green? Are you in the red? So it's very good. So for example, if somebody says they're a millionaire, that means that their net worth is greater. It's $1 million or greater, meaning that the difference between what they own minus what they owe is $1 million or greater. So if somebody owns $1.5 million worth of buildings, so the value of their real estate is $1.5 million, but then they have mortgages of $1 million, or I should say mortgages of $500,000. Well, 1.5 million minus 500,000 equals $1 million. So they're effectively a millionaire at that point because their net worth is $1 million or greater. But that being said, let me take a pause real quick for any questions that might have came up. And remember, to ask a question, you can simply unmute yourself if you're on Zoom, or you can type in the chat box. And if you're on Facebook or Instagram, you just type in your question and I'll be sure to answer it for you. So any questions at this time? Yes, sir. Absolutely. Appreciate it for sharing. And is it Sunny or Sunni? Sunni. Got it. Appreciate it, Sunni. All right. Any other questions or anything else? So I guess we can move on then. So now let's talk about my favorite one, income statement. Now this is the one you really have to pay attention. This is the one you got to take notes. But it's so simple. You'll be surprised how simple this statement is. This is fundamental at its finest. Income statement is simply how much money comes in and how much money goes out. Real simple. An income statement is a measure of how much profit or loss your company is generating. Essentially, it demonstrates how profitable your company is. So income is the top line of it. Income shows money coming in. And then you have expenses, which shows money going out. So let's just say that you sell t-shirts at $5 a shirt. And let's just say that you sold 100 shirts. Well, that's $500 in income. And perhaps it costs you $2 to make each t-shirt all in. So when you factor in everything. So $2 times 100, well, that's $200. That leaves you with a profit, a net income of $300. $500 that you sold it for minus $200 that you produced it for. That's a net of $300 to as the difference of the income or the net income. So when you're in the green, it's good, right? That means things are doing pretty good. When you're in the profit zone, it's good, and you should be profitable. I don't know what it is with taxes and all that. I know Uncle Sam has scared people to death when it comes to taxes, but people don't want to seem to be profitable. I never understood it, but then I got it when I started understanding more about taxes, because you don't want to pay Uncle Sam. It's okay, right? There's nothing wrong with being profitable. Now, you can be profitable, though, and also save money on taxes by utilizing strategies such as S corporations and all that good stuff, which we'll talk about if we have more time. If we have some time today, we'll talk about that. But if not, we'll just save it for the next segment. Today I want to start it off with some accounting basics and some pricing strategies. But income, money coming in, right? So that's sales, that's service income, laundry income, whatever it is, and whatever your business does, anything it sells and it makes money, that's counted as income. Expenses includes things like advertising, office space, utilities, rent, when you hire people, so salaries and wages, contract labor. That's very popular nowadays. A lot of people are 1099 contractors. Your cell phone, for example, utilities, supplies, right? There's so many expenses out there. I mean, we can go on and on and on about it. And I'll also show you a way that you can keep track of this stuff at a later time. Now, somebody asked, is there a workshop we have to go through how to complete these two statements? Not necessarily. Well, technically we do, because you don't have to complete these on your own. You simply download something like QuickBooks. Like for me, I'm all about making people's lives easier. I'm not about reinventing the wheel. I'm not about creating things from scratch. No, absolutely not. Right? So although some things that I've done in life were created from scratch, I'm all about, let's take what's already there and let's roll with it. Let's use it to our benefit. Let's make it better maybe, or let's start utilizing it so that we can save time. So we use something like QuickBooks. We don't create statements from scratch. Absolutely not. We live in the 21st century. We live in a world where things have become easier to do. At least in my opinion, I think things have become easier due to technology, advances, and everything like that. So you don't create these things from scratch. Now, next time we will actually be going through some samples. But now that it's been brought up, I guess let me just do a quick demonstration. Remember, this is for those that are on Zoom today. Let me just do a real quick demonstration. And just give me 1 second. Let me just make sure I'm sharing the right screen. Make sure nothing. All right, so financials. Let me see. All right, I'm just gonna do a very basic quick demo. So this is gonna be a balance sheet, real simple. At the top, you're gonna start off with assets, and assets include cash. All right, so let me just let me do this real quick. Assets include cash, inventory, let's see, buildings. Then you have, I'll just put other assets, right? Nothing too crazy. So other assets, and then you have your liabilities. Okay, so we got that. So with the liabilities, you have accounts payable. And then, I'm sorry, let me make sure I get my spelling down correct. So you got accounts payable, you got long-term liabilities, such as loans. All right, so we got that. And then I always like to put, every balance sheet you'll probably always see other, like the other category. And then the difference between the two is simply equity, or shareholders' equity for short. So equity is simply the difference between your assets and your liabilities. What you own minus what you owe equals your equity. Remember, you don't have to do this from scratch. You don't have to do this manually ever. It is good to get some practice using some Excel spreadsheets and everything like that, but you don't necessarily have to. Now, let me do another thing really quick. Let me just show you let me just see something. So this is not a live version. I don't like to use the word live version, especially when we're dealing with this. But let me just show you what it would look like when it's all said and done. This is actually something we send to our clients, by the way, as a courtesy in case they want to create their own financials. That's how nice we are, by the way. So you got your assets here. You got your current assets, cash, investments, inventory. And then some people have like software, website development. You don't have to put in all these things, but these are just some basics. And then you have the profit and loss. Profit and loss, remember, is the number one statement that you'll need when it comes to your business. So with the profit and loss, at the top, you're going to have your income, which is money that you make, money that's coming in. And then you're going to have your total income. And then your expenses, let's see here. This is not an all-inclusive list by a long shot. You have advertising and marketing, bank charges and fees, commission and fees, insurance, job supplies, legal and professional services, meals and entertainment, office supplies, the infamous other business expenses and the miscellaneous, rent and lease, repairs and maintenance, salaries and wages, taxes and licenses, and then travel. And then you put in total expenses, so you sum all those up. And then the difference between your income and your expenses is your net profit or your net income. So that's just a little bit. This is just an example of your profit and loss. So with that being said, you guys have any other questions at this time about the statements? And we actually do have one. We have one on Facebook. He said, I'm assuming you can still be profitable but pay less in taxes. However, my current knowledge, it doesn't make sense. Much of what I hear about is tax deduction from expenses. If you profit, if you profit, have cash flow, it will always be taxed, correct? Not if you reinvest the money. The only way to really save money on taxes is if you keep that money working for you. If you reinvest it. For example, you buy a building, like a rental property, or even an office space or a production center. Why is Amazon able to not pay any income taxes legally? It's because they reinvest the money into something, income producing assets. Buy a building, research and development, They do something that consistently grows the business, produces jobs. So as long as you're doing that, you're creating more jobs, you're reinvesting back into the business, you're buying assets, you're buying equipment, you're buying rental properties. That's one of my favorite ones. You're putting money into retirement, right? As long as you keep the money working and you're not just leaving it sitting in the bank, just dull and not doing anything, then you won't really pay any taxes. So that's one thing to note. If you have cash sitting in the bank, assume that money is going to be taxed, right? If it's just sitting there, not doing anything, for whatever reason, it's just sitting there. And I'm not talking about retirement accounts, by the way. I'm talking about clean, a pure bank account that money's just sitting. Now, you should have at least 3 to 6 months worth of your expenses saved in the bank at all times, right? But I'm talking about the excess. Anything beyond the 3 to 6 months. And nowadays, you should go the full 6 months because of COVID and everything like that. It's, I would say, outside of the 6 months worth of expenses, aka your reserves, I don't think you should have anything more in the bank. I think everything you have to invest that money. And we have a question about a trust fund. Yeah, a trust fund is good to use, but that's just, a trust fund is simply money that is protected. So anything that's outside of the bank, a trust fund is simply, I believe it or not, an IRA, individual retirement account, is actually a trust fund. A 401k is a trust fund. A 529 plan is a trust fund, because it's put into a trust, money that's protected against any like bankruptcies or anything like that. Health savings account, HSA, that's a trust fund. Or you can have a standalone trust fund, like a real estate rental property that's owned by a trust. Right, that's also a trust fund. So yeah, trusts are good. You should be protecting your assets, including your business, through trusts. For the sake of this topic, we're not necessarily going into the legal, right? We do have, an attorney that talks about legal matters and everything like that. So for this purposes, we're talking about the numbers, the accounting side of things. Any other questions from you guys? Any questions from the group? All right, so let's go ahead and go to somebody got a question? All right, looks like we just had somebody joining actually. So let me make sure, give me 1 second. Let me pause here for a second. Just make sure you can still see my screen. So why does it all matter? By the way, we have about an hour more to go. Why does it matter? Because you got to keep track of the money. And you're going to hear me say this next statement a lot of times. If you can't keep track of your money, you don't have a business. What you do have is a hobby. So if you don't have your spreadsheets rolling every month, if you don't have your QuickBooks, at least at a minimum, a QuickBooks account set up that's linked to your business bank account, and we will do a QuickBooks demonstration at a later time. But if you cannot keep track of your money, you don't have a business, you have what's called a hobby. All right, you will never know how your business is doing unless you keep track of the money. Like, how do you even know you're profitable this month if you can't clearly lay out how much income you brought in and how much expenses? How do you know whether or not you're overspending in a certain area if you can't set a budget or if you can't track that stuff? And it might sound like I'm saying it and it sounds easy from my end because I'm an accountant, but trust me, this is not just from an accountant. This is from any savvy business owner. You have to know your numbers like the back of your hand. Right? You got to know the numbers, because if you don't, you're going to get burned. When the bank is asking you questions like what's your revenue, how much profit did you make this quarter and all that, and you say, hey, look at my bank statements. Well, you've just gotten disqualified from the loan. It's going to throw them off big time because it makes it sound like you don't know what you're doing. Now, you could hire an expert on your team like an accountant who can walk them through these numbers, but you should still understand what numbers you are actually presenting, or are a representation of your company. It also helps you stay compliant with the IRS. So when you file your taxes, you do have to submit a profit and loss statement that goes on your tax return. So that's another thing to keep in mind. And it helps attract investors too. If you need money for your business, investors love numbers. They love charts. They love it when people come prepared to the meeting. They don't like sloppiness. When you ask somebody, "Hey, what's your revenue for this month?" and they say, "Oh, I don't know." I mean, that's a problem. Like if somebody asks you, "How much revenue did you make this month?" right, or let's say the past month, and you can't answer that question, that's a problem. I mean, how do you even know that your business is doing good? How do you even know that you can still stay in business? Over 1 million businesses have gone out of business due to COVID-19. So that's something that we gotta really take seriously. And also, when you know your numbers, you can measure them against your goals or against your benchmarks, or you can set benchmarks for the following year. We'll talk about that in our next segment, in our budgeting segment. But here are a few recommendations. Let's just scratch the surface a little bit. The first thing is you want to make sure you get QuickBooks. All right, so homework for today, you want to make sure you get some sort of accounting software going, like at least get used to it, at least learn it. And you want something like QuickBooks, something that helps keep track of the money. Right? With QuickBooks, it helps save you tons of time, tons and tons of time through automation. They have artificial intelligence, things that can help pull stuff from your banking records. And trust me, it is safe. And basically, it can put things in different places for you. All you have to do is review it and just make sure it's in the right place. What you should do too is you should have some sort of accountant, somebody to assist you with the numbers on your team. It's one of the first people you should bring on your team. Will help you get your books in order and also set you up for success, and hopefully save you a headache as well. So let's just pause really quick for questions before we get into the pricing segment. But somebody asked a question that's interesting. That brings me to the question, is it necessary to even have cash? I don't know. I mean, yeah, you should have 3 to 6 months in the bank, right? If you spend $1,000 a month in your business, make sure you have $3,000 to $6,000 in the bank. That I would never get away from, right? So you should have some type of cash. But he said, after hearing what you said, it would make sense to pull out a small amount of money, but keep the rest in rotation. Absolutely. There you go. What do you need cash for? You don't need it. Right? Your business pays for your vacation. Your business pays for your meals. Your business pays for your iPhone. Your business pays for your Apple Watch. Your business pays for your dates. Business pays for your honeymoon. Business pays for everything. What do you need cash for? You absolutely don't need it. You channel everything as a business expense, which we'll go through in another segment. We got another question. Do you still have QuickBooks special for multi-business accounting? Yes, we do. We offer those at $40 a month for the first company, and then $5 a month for each company after that, and that's a lifetime promotion actually. But it all has to be set up at the same time, so you can't later add another company. So we'll talk about that in another segment as well. But make sure you get QuickBooks. It is very, very, very important. Any other questions before we're going to transition a little bit into another segment, which is the pricing segment. How do you price your product or service for success? All right. So let's talk about pricing. Show me the money. One thing about price is that you really have to get it down. When I started back in 2010, starting a business plan and everything, I didn't charge anybody for taxes. I was doing taxes for free. From 2010 through 2016, like early 2016, I did it for free, right? And the reason why I did it was because, for one, I was trying to test my passion for this. Is this something I'm really passionate about? Is this something that I'll be willing to do for free if things went bad? But it was a mistake, though. I should have been charging people because I couldn't test my pricing. I was basically undercharging people when I started charging people, in that I wasn't charging people the correct amount or the optimal amount. So please learn from my mistakes when it comes to that. So with pricing, it's going to help you determine the profitability of your product or service. You must know the value of your product or service before determining the price. So if you didn't get anything out of today or anything out of this segment that we're doing right now, right, you should get that the value is what determines the price, not the price determining the value. Because one thing that I've learned about business and life in general, you are a representation of what you do to others. So if you're always bargaining with people, and if you never see value in the things that people do, you never see value in the things you buy, then that same reflection is going to go on your business, where people aren't going to see value in what it is you do. So when you're coming up with your price, first understand the value of it and then put a price tag. You know, what's the value of me selling a t-shirt? What's the value of me, opening up a therapeutic practice? What's the value of me opening up a cake shop? Is there true value there? And what separates my product or service from other people? Why should people be buying from me as opposed to down the street? Right? Somebody shared earlier that their laundry business essentially got wiped out because there was a competitor that was taking all the customers, and they probably had what's called a USP, basically a unique selling proposition. So you always have to have a USP. I guess that's like the fancy term. I simply call it, you need to know what you're providing. You need to provide something valuable. In our firm, I'll give you our unique value proposition, in that we basically, the way that we handle things is, for one, we're a virtual CPA firm. So during times like COVID, people love the firm, right? Because they don't have to come in person. You have a very streamlined process for preparing a tax return, and just getting everything done that needs to get done, right? A client can send us their documents, and all of a sudden, within 2 to 5 business days, they get a tax return back. Just like that. No, they didn't have to come into an office. They never had to print anything. They didn't have to do really anything but send us the documents and follow the procedures that we tell them to. So that's one thing. So we can put a price tag for the value that we offer, that virtual aspect of it, the fact that we're saving them from a convenience standpoint. Another thing that's unique about our firm is that, we educate a lot. So we do a lot of workshops, we do a lot of education. So we can put a price tag towards that, though. Now, the client might not see it, but that's value that we're bringing to the table. So we can put a price tag towards that. Another thing, we have access to a lot of professionals. Right? We have a referral network. Although we don't do audit services, we have another firm that can do it. So that's something else we can put a price tag on. Last but not least, longevity. We'll be here forever. Me personally, I'm 28 years old currently. The average age in my firm is about 32. So we're pretty young. We are the millennials. And, we'll be here for quite some time. The average age in my industry is about 65 years old. The technology age was like, some people are just now getting used to actually seeing clients virtually. Used to Zoom and everything. Your average CPA does not know how to use Zoom, unfortunately. So you got to know what your product or service is worth before you put a price tag on it. Now, one thing that I've learned in life is that people will pay full price for something valuable. If you tell somebody that this is the product, this is what it can do for you. I can save you $10,000 in taxes, right? Or I can save you. We usually get down to the penny. I can save you $10,561.29 in taxes. And we're not necessarily going to share how we're going to do it until you pay. But here's an idea of how our firm goes about it. People will pay $3,000 for that. We typically charge 30% of what we're saving the client. So if we're going to save you $10,621, best believe we're going to charge you $3,200 and let's say, $9 or so. So people will pay full price for something that's valuable. If you bring value to the table, people will pay for it. It all also comes down to supply and demand. Right now, is not a high demand time for tax preparation, but it is an extremely high demand time for tax planning, because people are looking to save some extra money. They need savings elsewhere. Right? They need cash. And a few months ago, when the COVID loans and everything were out, that was a huge demand thing. So we can put a price tag, or we can put a higher price tag on that, because the supply of that, or the demand for that, is much higher. And right now, the supply of accountants and CPAs, especially ones that can do things virtually, is extremely low. So when you have low supply and high demand, you should be increasing your prices. When you have low demand and high supply, then you might want to tone down your prices a bit. For example, we may charge a customer extra if they send us their documents on April 14th, as opposed to sending us their documents on February 1st. Right? There's a different need. There's a different sense of urgency when somebody needs something right then and there, as opposed to, oh, we got time. Right? They're gonna be willing to pay a much higher price when they need it right then and there. So that's when you're coming up with the price for your product or service. Please have these things in mind, because it is very important. It all comes down to supply and demand. Who wants it and who has it? That's the way the world works. Who wants it, who has it? Right now, COVID-19 vaccines or pharmaceuticals, very hot stock right now. Very, very hot. Huge demand for those. But limited supply, because not everyone is looking out for COVID-19 vaccines. So that means that their stock price is probably higher than it usually is, because there's a higher demand for that product, that company, that service. So that's just something to keep in mind there. And then also understand your target market. Not everybody's going to be willing to pay the same price. And that I can't sell a $3,000 tax plan to somebody who just has a W-2 and that's it, versus a business owner who's been in business for 3 years. He just got to the 6-figure mark in revenue, and he's looking to save on taxes. If we present him a tax plan that can clearly save him $10,621.39, then he's going to be probably willing to pay $3,000 for that tax plan, as opposed to somebody who might not really benefit from it. So when I talk to my team, when we get on training calls, and by the way, in about an hour or so, we have a team training. I usually don't go that long on Mondays, by the way. My days usually shut off at about 7 p.m. and then I pretty much just relax after that. But today is just a day that, just speaking, right? Just giving out knowledge, just giving out expertise. But you have to understand who's going to pay for it. Understand your target market. Ultimately, understand who is the buyer of your product. Or Grant Cardone might put it, who's got my money, right? Who got my money? I love that quote, because it is very true. When you're in business, you need to find out who's got your money. And it is your money, because you have the product, you have the service. In exchange, people will pay you for it. So in order to determine a good price, understand your target market. Also, look at what's trending in the industry. Look at the trends. If people are charging $1,000 on average for tax prep, for example, then why in the world should you be charging anything less than that? Now, you could undercut the market just a little bit, just to gain some market share, but cheaper doesn't always lead to more customers, because sometimes, value is something that's perceived. For example, this water bottle here is, in a store, if you're getting just one bottle, this bottle might cost about $2 just for this one bottle. But if you buy the pack of 12 or 24, it might only cost $3 total. And you probably wonder, why in the world would one bottle cost more than, or almost more, at least on a per bottle basis? Why would that cost more than the entire bottle of more bottles? It's because there's a huge demand for this one bottle. When you go to a 7-Eleven, this one bottle has much higher demand than a pack of bottles. It's kind of silly if you think about it, because 7-Eleven also sells the pack of bottles. But if somebody's coming home hungover from a party or whatever it is, and they go to a 7-Eleven, they're looking for this one water bottle. They're not looking to buy a whole case of bottles. They're just looking for one. The convenience of not having to carry that entire big bottle is worth something. So they're putting a price tag on it. So that's something that, yeah, go ahead. Absolutely. Mm-hmm. 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 Mm. Wow. Mm-hmm. Mm. 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 Mm-hmm. Mm. Mm-hmm. Exactly. Mm. 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 Wow. Mm. 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 Mm-hmm. Mm-hmm. Exactly. Mm. 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 Mm-hmm. Wow. Mm-hmm. Exactly. Exactly. Mm. Mm. Mm-hmm. Exactly. Exactly. Mm. Yeah, no worries. Appreciate it, James. That's a very, very important point what James just mentioned. For those that didn't catch it, he basically shared a story of somebody who bought products, right, from another group that were selling them basically as a reseller, um, and was making a higher margin on that from just, I guess, I mean, it could be expertise, it could be who you know, the type of painting. Like, for example, a Picasso painting that's laying in your house that you might have bought for maybe, what, $1,000 back in the day. Well, that's going to be worth a lot more now because Picasso is extremely popular. So when it comes to your product or service, it's all about perceived value. Find out what people are willing to pay for whatever it is you have. And what you can do is look at the trends in the industry. Look at what's trending. If a Picasso painting is going for $1 million and you got one laying in your home, I think you should sell it for more than $1 million. It just goes without question. So supply and demand is very important to keep in mind. Now, here's something that you can look at too to determine your price. There's a platform called IBIS World, which is IBIS World. It's a research platform. It's actually the #1 research platform where it can help you determine the right price. How it does that is it tells you what's trending in your industry, what the growth rate is, what the profit margin is, so the percentage of, for every dollar, how much profit is made from that dollar. That's your profit margin. So ultimately, that's a great platform to use. Now, it does cost money to get a report, but if you send me an email to jb@badutaxservices.com, once again, that's jb@badutaxservices.com, what I can do is I'm willing to offer you a free IBIS World report. Just shoot me the industry, give me as much details as possible, and I'll be able to send you a report. It's a condensed report. It's about 10 pages, no more than 10 pages long. But it gives you the key things you need to know. And this was the same report that I read back in 2010. And this is the same report that I'm reading in 2020. I read the report once a year to find out what's going on in my industry. Does anyone have any questions about that? All right. So in general, IBIS World will help you. It's the reason why part of the reason why we're going through this is to help you determine the right price. We might not get to your exact price, like we won't give you an exact amount that you should be charging. But with these slides, what I'm doing here is I'm essentially giving you the tools that you need in order to potentially go out and get the right price. So understanding the supply and demand dynamics of your industry is very important. Also, reading the report, and please, when you're reading the report, like IBIS World, something that's only 10 pages long, please read every word in it. Read it from head to toe. Don't skip anything. This is your business. This is your well-being that you're dealing with. It's very important, right? So it's IBIS World, IBIS World, for those that want to write it down. It's a great report. That's the report that I used when I started my firm, my tax firm. And that just gave me a lot of insight that I needed to know. It doesn't just give you pricing mechanisms. It gives you what's overall going on in your industry. So that's a great site that you can use to really get a hold of your industry. Utilize the internet. I mean, there's so much information nowadays on the internet. But if you're a service provider, such as a contractor, a real estate contractor, then there are sites like Thumbtack, which can allow you to see how much people are charging, maybe on an hourly basis, for what it is that you're looking to do. If you're a retailer, you might want to check out Amazon to see if somebody's selling a similar product, and if they are, how much they're selling it for, and then maybe go to different sites and see if somebody is selling it. And usually, it's very rare that nobody has ever in the history of mankind came up with your idea before. But sometimes you might find the case that you're the very first person to think of this idea, or maybe actually put it into action. So sometimes your product or service might not exist on the internet. So that one you got to get creative. I would say with that, try to find something close to your industry. Maybe it's not that specific widget, but maybe it's something that was created or is out there right now. So something like that. So for example, maybe I was watching a Shark Tank show that it was an episode about these guys who came up with portable chargers for the Teslas. And I said, wow, that's huge. Now, I'm sure there's somebody out there that probably came up with that idea before, but never actually put it into action. But it's not, I mean, at least to the Sharks' knowledge, they actually, I think they did a deal with them. There was nothing really out there like that. I believe it was Mark Cuban and Barbara. They went on like a partnership, and they went ahead and actually partnered with them. So something like that is huge, right? Something like that is massive, but there might not be a price out there that you might know because it's such a rare product. But you can look at, hey, what are people charging for charging stations at home, for example? And then what are people charging? Like, how much does an iPhone charger cost versus a portable charger? What's the difference between the two? What's the unique value proposition between those two? Right? You can look at similar products or similar things and then just see what the dynamics are. Another thing you can do is maybe become a customer of the competitor. That's something else that you could do is essentially, for example, if you're a tax firm, you can call up, your local H&R Block and explain your situation and ask for a quote. Sometimes you might get lucky and get a quote. And what you can do is you can use an undercutting strategy, especially when you're starting out. Maybe lower your price a little bit. People do pay attention to price differences, especially now during COVID-19. People are very price sensitive. So price sensitivity is very, very important. So you can call up a competitor, maybe call up 3 competitors, see how much they charge for that specific scenario. And maybe you charge a little bit less so that you can undercut the competition. But remember, no matter what you do, your product or service must be valuable. That you can't get around. All right, if you're out selling DVD players right now, you're not doing too good. Unless it's the hottest DVDs on the planet that they just don't make those anymore. And there must be a need for it too. Like, there has to be a need. Somebody who's selling masks right now, that's a huge need for people. I remember at first we were at a shortage of masks. I mean, people were dying to get a mask, but now I guess it's becoming a bit more popular and they're developing more. By the way, the people that created, or who have been known to create the disease are also the folks that are selling the masks to us, which I find quite interesting. I mean, talk about a monopoly right there. To create a disease and then to create a solution to minimize or mitigate the disease. That's quite powerful. I think that's what I would call a monopoly. Any questions on this slide or anything that we've been talking about for the past 5-10 minutes? Or comments? Let's see, we got something in the chat here. Absolutely. All right. I think we all just might be tired today. But yeah, just a few more slides, don't worry. All right, so what you can do when it comes to, with the pricing, you can also set a flat rate for different services. So for example, in our firm, a basic tax prep is about $150. That's for your standard W-2 only 1040. But for tax planning, we typically charge about 30% of the savings. So if we're going to save you $10,000, best believe we're going to charge you $3,000 for it. And then also tax representation is at about $250 an hour. So these are different rates for different services. It can be a flat rate. It can be a percentage-based rate. You can have different prices for each product. So it's good to provide discounts when somebody's ordering in bulk. That's something I would strongly recommend that you do. And then your price can be based upon the specific location. So if you're living in the city of Chicago versus a Gary, Indiana, you might be paying lower for your tax prep rate. Or you should be charging lower for the tax prep rate because the income demographics are, quite different in those two areas. So that's another thing you want to think about. Think about where you are. Like if you're in California, people are going to be willing to pay more money for that. If you're in New York, people are going to be willing to pay more money because New York tends to be more expensive than other places. But if you're in a Nebraska, or if you're in a Wyoming or Texas, then it's a lower price point there. Same thing with real estate. I mean, you definitely can't say enough of this for real estate. It's huge. Service can be hourly based. For us, we don't really do hourly things except for tax representation. On the representation side is where we do the hourly. So when we're representing clients in front of the IRS, we might do it at an hourly rate. Just because we don't really know how many hours we're going to spend on that project. So to save ourselves and to save the client, we charge them a $250 hourly rate for that service. But on top of that, we charge a $500 to $1,000 retainer, basically a deposit up front, so that we can make sure that we have enough skin in the game so that we can start the project. Ultimately, I would use value-based pricing. Value-based pricing is basically where you're determining your price based off the value you're offering and not the other way around. So some people are so price conscious, like they're price first without seeing what the thing is even worth. Warren Buffett is one of the greatest investors on the planet because he uses value-based investing, or value investing for short. He first determines a great company based off the value, what it's worth, and then he puts in a bid for the price. And same thing when we're buying real estate, we don't necessarily look at the price first. We look at the value first. How much is this thing worth? How much income can this thing produce to me? And then I'm going to back my way into the price. So I would say stop. Anybody out there who's very price conscious, I would say just know what you're paying for. Understand the value of what you're paying for. And then same when you're offering a service, understand the value of what it is you're providing. Because remember, life is a reflection of what you do to others. So if you are, quote unquote, ripping people off, or if you're, quote unquote, just price hungry, then people will be price hungry at you too. Right? It's the same. Life is it's a game of karma. You get in what you put in. Right? So it's that's something I've learned in life, is you really have to make sure that you, whatever it is you want others to do to you, then do to others, right? In that, especially when it comes to business and pricing and everything like that. So any questions on that component before we get into target pricing? This is where we get very specific into the specific market and everything like that. Any questions or comments? We got about 15 more minutes left, so we probably got about 5 minutes of content, and then we'll save the end 10 minutes for some Q&A. So any questions? Last call for questions before we move to target price. Yeah, IB as in boy, Ibis World. And yes, so if you shoot me an email, I will be more than happy to send you a free report. And the email address is jb@badutaxservices.com, jb@badutaxservices.com. Absolutely. No problem. And you can email me about anything too, by the way. If you're on social media, you can feel free to, reach out to me. I'm always here to help, always happy to, help out with everything. So that's exactly, appreciate that. All right, so the last slide of the day is target price. Now, this is more if you want to get down to a specific target, if you want to get to a specific, market, essentially. So you should do a market analysis. In that, look at what millennials are paying, look at what the baby boomers are paying, look what people in Chicago are paying. try to do some sort of market analysis. That way, when you step into a new market, you basically don't sell yourself short, or you don't over exaggerate yourself, basically. So that's something that you do want to do. You definitely want to get on the internet. You definitely want to do some searches online to see what people are paying for what in different markets. Always keep in mind what you or someone else would be willing to pay for that product or service. So, for example, me personally, my taxes are super complicated, right? Extremely complicated. So for me, if I wasn't a tax professional, I would be willing to pay a lot of money to get my taxes done. To be exact, I would be willing to pay $5,000 to somebody to prepare my taxes, because I understand the level of complexity that goes into it. I understand the amount of time and energy that has to be put into that return. Of course, you get better over time, economies of scale and everything like that. But that's what I'd be willing to pay somebody. And also, if somebody told me that they had $10,000 with my name on it, and they had a proven track record for it, they demonstrated to me, and they showed me how they can save me $10,000, I'm going to be willing to give them $3,000 for that, hands down, without a doubt. So try to understand what you would be willing to pay for it, or what someone else would be willing to pay for it. So for me, I typically charge about 30% of the value of what it is that I'm offering. So if something is worth 10, I'm charging 3. That's just my pricing philosophy. I learned that from one of my business coaches, and it's done me pretty good so far. At a minimum, you should be able to break even. So break even is simply when you're making enough income to cover your expenses. So that's where if you're making if your expenses are 1,000, then your income is also 1,000. So basically, you're breaking even. Yeah. So break even is simply, what point is it that you are not profitable, but you're also not losing money per se? So what's the sweet spot? Research the typical profit margin of the product or service in your industry. This one is actually it's a good strategy to use. So if you're basically, let's say you make t-shirts, and that the profit margin in your t-shirt industry, you've looked at the IBIS World Report, you've actually read it, you've took notes, you see that the profit margin in your industry is 20%. And on average, it costs you, let me just see. So if it's 20%, then that means that 80% of it is going towards expenses. So it's real simple math, very simple math. You know that you can sell the t-shirts for $10 a shirt, right? Or I'm sorry, let me take it back a little bit. You know that there's 100% in the population, right? The number is 100%. 20% of that number is profit. What's left over? 80%. So that means 80% are expenses. Now all you have to figure out is how much you need to sell it for. So you're backing into the sale number or the price. So your price is simply $10, right? 10 minus 8 equals 2. 2 divided by 10 is 20%. So you can do it that way. Me personally, I like to start off with the value first. What's the value that I'm offering? And then I like to go into the price after that. But if you needed a benchmark, if you needed something to get you started, then you can try the profit margin route, where you see how much people are typically selling shirts for in your industry. You know what the profit margin is. So then you can use that average sales price as a ballpark number, and then you just determine, basically you say, okay, well, if I sell it at 8 and I multiply it by 20%, which is my profit margin, this is how much I should expect in expenses. Or let's say you may know your expenses. You know you spend $6 a shirt to make a t-shirt, or let's make it easy. Right? You know you spend $8 to make a shirt, and your profit margin is 20%. Well, now you just need to sell it for $10. That means 10 minus 8 equals 2. That's a 20% profit margin. So with that being said, we pretty much today what we talked about was first and foremost some accounting basics. We went over 4 financial statements, but it was 2 in particular: the balance sheet and then the income statement or the profit and loss statement. And then we also talked about some pricing strategies, different ways to get to your price. Next time we will be doing a demonstration to see, hey, if I was to sell it at this price, how much can, we'll be doing some budgeting and some analysis. So we'll get deeper into the numbers next time. Today, I wanted you guys to really understand the mechanics behind how to do some of this stuff and some of the stuff that we go through when we're determining and making these decisions. So with that being said, love to open up the floor for any questions. Looks like we got about 7 minutes left. And, if no questions, then, we'll wrap it up. But any questions at this time? And remember, to ask a question, you can unmute yourself, or you can just type in the chat box if you're on Zoom. If you're on Facebook or Instagram, then you just type in the chat box. And thank you guys for listening too, by the way. No, go ahead. Hey, early bird gets the worm. Come on. Mm-hmm. Mm-hmm.
Versus my view in English. And you open up my eyes a lot more, so I appreciate it. So I'm looking forward to the next class.
Absolutely. Absolutely. Appreciate it, Sonny. All right.
Hello, once again, I'm Memory, and I like that you talked about multiple sources of revenue. I've always been one of those people that had candy stores, sold clothes. It's just in me. My family, my grandfather, mother, father, them, they always had multiple sources of money, like to get money. So when I see things, it's a couple things in my head. Like I shared that I brought a dance floor from a neighbor, and that dance floor for the last 5 years have taken off into like a summer project. I'm renting dance floors, chairs, tables, setting up people's picnics for their family reunions, and it's just taken off. It's been formed a life of its own. And and I really want to keep seeing it kind of grow, but the pet store is more what I'm focused on. But I'm not willing to let that business go.
Exactly.
You so should I keep it a separate, or should I make it a valuable business? Should I feed more into it?
I mean, honestly, life is too short not to chase your dreams. Life is too short not to pursue the things you really want to do. So if it's something that you're really passionate about and you can make money from it, then I think you should go all in, full throttle. Like, life is way too short. We don't know when we don't know when the world is gonna end. So for me, I'm all about going all in if it's something that I believe is worth it, and then also if I'm passionate about what it is that I'm doing. So that, I would say, I encourage you, whatever it is that you're doing, like, just keep doing it. That business, I mean, it's popular, right? A lot of people are getting pets. I mean, James, he shared a story about somebody company that's making over $5 billion in revenue, just off subscriptions. So no dream is too small. You just got to execute it. All right, so we got about 4 more minutes left of questions. You can feel free to unmute yourself. Feel free to type in the chat box. We do have a quick question here on Facebook. Question is, definitely appreciate you for dropping knowledge. You mentioned having multiple streams of income. How did you go about simultaneously starting yours and not spreading yourself too thin? So I think we can have a separate conversation about that because we did go over that a little, when we started off. But basically, is regardless of having multiple streams of income, I'm focused on one stream though, which is my tax firm. And to this day, I'm still focused on one thing, which is the tax. The car rental business is there, but that's a passive income source. And remember, when something is passive, it's not meant for you to be actively involved in it every single day. It's passive. You should treat it as such. You might have to, nurture it a little bit in the beginning and everything like that. But at the same time, it's passive. Passive means you don't have to necessarily work hard to make that money, whether you sleep, whether you're on vacation. I was just in Cancun a few weeks ago, like literally not even a full 2 weeks, and my businesses were still running effectively. I didn't take a single phone call. I didn't respond to a single email, and it felt good because I knew that I've built something. I've built passive income to the point where I don't necessarily have to sweat or work for money. Now, of course, I still choose to work in my tax firm and keep building it, right, and pass it on from generation to generation. But that at this stage in life has become a choice as opposed to something that's required. The hunger in me, though, is something that keeps driving me. And I'm also very, very organized and focused in everything I do. Every hour, every minute of the day in my calendar is literally planned out. Now, there are some downtime and everything like that, but you got to stay organized. You have to have a calendar, and you have to have a drive. You have to have a sense of purpose as well. And I forgot to mention my purpose. My purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle.
I have one last question. It's probably to you and to Mr. Parker.
Mm-hmm.
When you getting your business off, how do you figure out how much capital you will need to get this business running for like 6 months, or to set it up right?
So we'll talk about that in the next segment, but that's in a budgeting. You have to have a budget, a clearly laid out budget that clearly demonstrates all the expenses that you anticipate in the business. Right, so we'll talk about that next time for sure.
Okay.
Absolutely. All right, so with that being said,
great question.
Yeah, that was a great question, by the way. Definitely appreciate that.
All righty, well, if there are no more questions, thank you very much, Jeff Badu. Virtual clap, thank you very much.
Appreciate it, James.
We're all clapping. And then next Monday, guys, we will have our class. If you weren't on the call earlier, because we're doing Zoom, I'm trying to find out my files that I will send you for the classes. So I talked to our tech support. So hopefully I'll have those, and I'll be able to get those to you when they send them to me. I thought I would get them today, or at least by tonight. I haven't. So as soon as I get those, I will send those out on the group email. Okay. What else? I think that's it. Jeff, thank you very much, my friend.
Yeah,
Learned
no
a lot
problem.
again. It was great. This is like my second or third time in the class, so I love it. And but let me know if there are no more questions. Then, guys, we will let Jeff go. Enjoy his wife. He's newly married, just fresh off his honeymoon. Enjoy your time, man. And thanks a lot again. I appreciate you a lot.
I appreciate it, James. And I also have the recording too, so I'll be able to send it to James, and then you can feel free to distribute it as well. But appreciate you guys, and see you guys next time.
All right, boss.
All right, see ya.